Hey guys, how's everybody doing? Thank you so much for being here. I really appreciate it. All right, let's get this show going, see what's going on. Gosh darn it. All right, I forgot to fix the one thing I was supposed to fix to be able to do that. Gosh darn it. Let's do it like this. Um, I have the Diversified Divas ready to show you in the Daily Factor, but we're going to do the Daily Factor Gold and Silver show tonight, is what I was planning on doing. So let's see if I can make this work. All right, so let me try to do this. Share screen. Um, that's what I needed to do. Hang on, I'm sorry. Hey, Marcus, I know it's late there in Pennsylvania. I'm still trying to figure this out. I think I just did something I didn't need to do. Hang on. Let me throw this back over here. And then let me try it like this. Share screen. Share window. Daily Factor. Sweet. Okay. All right. Here we are, the Daily Factor. All right, the daily factor is based on the max factor, which is my own proprietary metric, which I think is a good way to do it. Maybe even I'm saying a better way or a different way to do it rather than to compare these funds to each other than total return. Do not use yield. Do not compare. Don't pick a fund that has a 40% yield against a fund that has a 30% yield and assume the 40% yield's better. Yield's the worst way to do it. The max factor is not a bad way to compare these funds. So tonight on the Daily Factor, we just break down a subset of the funds. So we're going to look at gold and silver based high yield in so covered call funds basically. All right, so let's just see who's in the lineup tonight. So we're going to start with the high yield there, and God, I'm addicted to the pinch to zoom, but you can't do that. Anyway, whatever. The highest yield is Y Gold. I think it says 13.8 or something like that. Anyway, the NAV's gone from $42 to $44. I mean, that's pretty good, especially when you're yielding 13.89 or something. I think is what that says. Okay, or no, it's actually, gosh darn it. It is 13.39. Okay. Well, let's do this. Let's go from highest yield to lowest. The highest yield is Gold Y. This is from our friends over at Defiance. Defiance and YieldMax are notorious or famous, or however you want to look at it, for generating yield and just lots of yield. And Defiance does a great job too. And you can see out of all the gold and silver based funds, this one has the highest yield. But there's going to be a cost. It's probably going to have the worst NAV. And sure enough, look right here in this column where it says quarterly NAV return. It's only one out of any of them that has even negative NAV. Why does it have negative NAV? Well, it's nothing really it's doing right. It's just giving you more of your money back in the form of yield. So it has to come out of NAV. Oh, that's pretty cool. When you do this fast, it makes it bigger. That's a cool feature. Anyway, all right. Next is Silvo, yielding about 20%. This thing's now went from 92 to 100, which is amazing based on silver. You got to love that. Next is Gold I. This one yields about 16%. NAV went from 168 to 176. It's only 4%, but I mean, when you're also getting a 50% yield, 15% yield, and you have positive NAV, I mean, not bad, but it makes you think, had gold not been on a total face ripper, your NAV probably wouldn't have been, positive. But anyway, whatever. SLJY, this is based on silver miners. I think junior silver miners were, junior, or I don't know, silver miners, whatever. It's based on SLJ, whatever that is, or SLY. It's a silver mine. It's junior miners, though, whatever that means. I guess smaller miners. Anyway, next we have K-Silv, also based on, well, it's not based on miners, it's based on silver itself. Now look at this one right here. This has it going on. I mean, is that really right? Quarterly NAV return of 50? There's no way that's right. NAV return of 51%, but it did go from 25 to 39 basically, which is 51%. I mean, that's amazing. 14% yield. Sorry about the freaking camera problems. Anyway, we'll figure that other stuff out later, but that's amazing. Then we have WYGold. Then we have IAUI. WYGold yields 13, IAUI yields 11. These both have decent NAV, especially IAUI's NAV went from, it looks like 53 to 57. I can't quite see it. Then we have K-Gold. Hell, K-Gold's NAV went from 24 to 31. Even I can see that. Great job, K-Gold. And it paid a nice yield right there. Then we have iGold, paying the lowest yield, but usually lowest yield comes with a better NAV return. Not a great NAV return, but 7% is not bad, so we'll take it. So that's our lineup. Is any of you guys' favorite funds in there? There's 70 of you guys here. I appreciate you guys being here. Bond, what did you do here, bud? Bond bought some GDXW today. Its distribution is less than half of last week. Oh, that sucks. I'm sorry to hear that. I'm sorry to hear that. Let's look at that one. Let's look at a little GDX action. Well, you got to like the price action on this instrument. Looks like GDX had a good day today. Now, this is a 30-minute chart. It opened on lows, closing on the highs is good. It closed on the highs yesterday, closed on the highs the day before. All right, so there's GDXW. So it paid, I'm sorry about the distribution. So right there was that 72 cents? God, I can't see yours. And that one's 66 cents. That one's 65 cents. 44 cents. So they have paid smaller amounts in the past. I mean, because they paid 44 right here. Well, I hate to hear that, Bond. Oh shoot, there is a new one that obviously I don't know about, or Marcus wouldn't be putting the letters up there. Or is Marcus saying IAUI is his favorite? But AU, or AU, gold, right? All right. Global. Oh, no, I'm sorry. I thought it was a global gold miners. All gold miners are probably global. There's not, not probably, most of them are probably global from the U.S., whatever. It's Global X is gold miners. So we have AU. Okay, well, Global X, Global X, has BCCC, which is their Bitcoin fund. Anyway, all right. This one's not old enough to be in the max factor yet, so I need to remember to put it in the max factor. Anyway, it'll go on the max factor. Yeah, we'll have to see. We'll have to see what it pays for sure. 30 cents, same as GLDW this week. Really, Bond? Oh, Bar H. Really? Okay. Oh, AU is gold. Are you saying AU is gold and silver? Okay, AU. Well, we could just look here. Let's see what it says right here in the top 10. Well, it just looks like it's, I mean, Newmont, it looks like it's different mining companies. But gosh darn it, I hate having to scoot so close to the screen. I mean, all right, well, let's go back to the, thanks for the tip on AU. Let's go back to let's go back and see what the Max Factor says. So we can look at the diversified divas and that kind of stuff. Okay, so what we did is we looked at the highest yield. The highest yield is usually the worst way to look. In fact, usually you want to take the one with the highest yield and throw it out. Typically, I mean, and that's definitely the case today also. I mean, sorry, GLDY. I mean, these poor Defiance funds just get no respect. We'll look at GLDY in a little bit. But anyway, but let's try to look at something positive. So let's say we could just, if we just sorted it by NAV return, it's K-Silv has a 51% NAV return. Now, I mean, so let's go look at that. Let's evaluate that a little bit really quick here. K-Silv. I mean, you know, this is only a quarter of a year that's been around, but hell, silver's gone from 42 to 70 over the same time frame. I'm just gonna silver here. I mean, this, I mean, this goes to show you right here the main key to a good cover call fund. The cover calls are important. Pick a good underline is the number one most important thing. And these guys have obviously done that. That's amazing, isn't it? Back to the daily factor. Now K Gold's the same way. Let's look at K Gold. This is also from Curve. I should have just put the entire frickin' fund in K Gold and K-Silv. I mean, look at this. This is just out half a year is all this has been out. And I mean, granted, gold's gone from 300 to 400. So any covered call fund should do pretty well in that environment. When you have a fund that's made, or an underlying that's made 33% in half a year, so it's making about 70% a year. I mean, even with capped, what I'm saying is even with capped upside, you should do well. And with somebody like Howard running it that knows how to cap the upside in an intelligent way, I mean, heck, he's gone from 24 to 31. So just to make it even, Steven, that'd be like going from 240 to 310, whereas gold's gone from 300 to 4. He's getting a lot of the upside of the parent, and spitting off a decent dividend. Now the dividend's not the highest one, but he's sure getting you a lot of your return in the form of NAV, and you are getting some dividend. I think those are impressive. K Gold and K-Silv. I mean, obviously they're impressive. They're both up. They're both up the most. And then we have SLJY is up 17%. Let's go check that one out. Now this one is just brand new, but SLJY, and its parent is SLJ or SLY. I always get this confused. No. I'm thinking maybe SLY. Do you want to bet? No. Anyway, SLJY. Let's just do this. SLV. How about that? SLJY and SLV. Just to give us something to compare it to. Man, look at the silver's incredible. And this is only over a third of a year or something. That SLJY is incredible, man. This is the place to be. I wish I would have known that a few months ago. A few months ago, I was de-risking from crypto. I saw the crypto pullback and stuff, but I didn't, and I did an all right job de-risking from crypto a little bit here and there. I didn't de-risk enough, whatever, but I did not do a good enough job uh, reallocating it into something else. All right, what else do we have? Silvo. I mean, that's the same thing. IAUI. Let's go look at this. IAUI is from Neos. Okay. Man, this is getting thick. We have AUAU, and then we have IAUI. I mean, all right. So that's cool. That's NAV return. Let's look at the stable decks. We can look at volatility. This just gives each one of the funds a VIX. It figures if the fund had a VIX ranking, like GLDI, if it was trading with it, it had its own VIX, which it doesn't. It's kind of stupid, but using a similar type measurement, it'd be trading about at a 10 vol or 10 VIX. IAUI trades at about a 14. Gold Y trades at about a 15. iGold trades at 19. Silvo trades at a 20. K Gold trades at about a 21 vol. Now, Y Gold's the really volatile one here, at least mathematically. Y Gold, SLJY, and K Silv are the ones that are super volatile, at least mathematically. So the most volatile one mathematically is K Silv, and the least volatile one is. Well, let's just look at this. Silvo's at 20 on volatility and K-Silv's at 54. Let's compare K-Silv and Silvo. K-Silv's doing a good job, but the numbers are telling us, hey, this thing's risky. Just beware. I mean, not like we could spot it, but I mean, you risky's good in the nut market. I mean, you don't mind taking on a little risk in a bullish market, but you can see this. I mean, it's getting all the upside or you can see SLVO is a lot more steady. Now, is SLVO too steady? I mean, possibly. All right, that's for you guys to decide, not for me. All right, we got 10 people here. That's good. That is good. All right. So we looked at the volatility. The stable DEX is the same thing as the volatility expressed in a different way. The most stable one out of all of them is Gold I. And how can something be a zero on? Anyway, Gold I and K Silv. So yeah, Gold I is the most stable. Check this out. Like I say, stability can run both ways, but you can just visually see Gold I looks a little too stable in that one. All right, so we can look at the Moxie ranking. Which one has the highest Moxie ranking? iGold, Silvo, Y Gold, and Gold I. Those are pretty good ones. But I mean, those are pretty good ones. Anyway, all right. Here we go. Sustainability, otherwise known as the short-term max factor. Number one is, and we can also rank it this way. It's the same thing. Let me make sure. Okay. Yeah. All right. Number one is K Gold. And I mean, how could you? I mean, but on the other hand, how can you not make K-Silv number one? Are you serious? All right, this metric needs to be changed. Are you okay? I mean, they're both good, but I mean, K Gold has a 28% NAV return, a 10% yield. It's because it's 3 times as stable. Once you factor in the stability, my freaking this metric's kind of a panicking. The metric's kind of a scaredy cat, but I mean it's good to err on the side of that K Gold is super, just mathematically is super non-volatile. It has about half the volatility of K Silv. So I mean there's something to be said for that. I mean, it's still doing pretty well, at 28% NAV return. Number two, K-Silv could work also. Anyway, number three, we have down here, we have Silvo. Silvo's kind of a good, well, Silvo has more yield than either K-Silv or K-Gold. So if you need more, but of course, you get more yield, you're going to get less NAV return. It only has 8% NAV return. But then we have Gold Eye. Now, Gold Eye is a stability champion. It would only be at 10 if it had a VIX. Or on a stable DEX, it's about 1.2 times as stable as the broader market. Then we have IAUI. We were just talking about that one. That one's, I mean, what's wrong with this one? This one's a good, I mean, 11% yield, NAV's solid, volatility numbers are solid. It's about the same. It's an 87, which means it's 87% as stable as the broader market. I mean, that IAUI is a good looking one. And then we have iGold, YGold, Gold Y, and SLJY. So this Gold Y is just a mystery to me. I mean, it does a good job what it's supposed to do. What, maximizing yield, it pays the yield. Let's compare Gold Y from, it's not from YieldMax, it's actually from Defiance, but I mean, Defiance, YieldMax, I mean, you guys get this, so it's from the team that trades it, the trades YieldMax. And sure enough, it has the YieldMax characteristics. I mean, NAV, went from 20 to 16, whereas in a competing asset, the NAV went from 161 to 176, was up a little bit, not a bunch, 5-10%, whatever. But you got a yield in that other asset also. You got a $23 yield in the other asset. And Gold Eye looks pretty good here. And Gold Y, I just haven't seen Gold Y. I mean, people think I love YieldMax, whatever. I love the good ones they come out with. It sure hasn't been Gold Y. And I sure don't like feed in 5e, and I sure don't like some, it's a case by case, but I mean, I wonder if Gold Y beats anything. Usually, the coping mechanism is with the higher yielding ones, these ones that pay a huge yield. Well, they do better on the downside. It doesn't even look like this one did better on the downside. It just eyeballing it. It looks like it even fell a little bit harder. So it's whatever. All right, guys. So what do you guys want to talk about? That's it for the daily factor. I'm just trying to get the kinks worked out. Bond, what are you talking about here? Okay, supposed to be a rebalance the futures contracts for gold and silver too. You think next week the gold chemical symbol is getting views? Is it AU? I didn't even take chemistry, but I thought it was AU, right? Anyway, but yeah, it is getting abused. It is getting abused. Okay, so let me show you what else. Let me see if I have anything else interesting. I think the diversified divas, we haven't talked about this in a few days. Oh, shoot. I need to add Mago. Mago is now a diva. It's just not in here. But I think MAGO should be an understudy. It's not going to be a Devo because it can't switch stocks in and out. It's a Diva because it does Diva, option strategies, and it's diversified. I think it's a good fair comparison for these. I'll put it in there. We'll probably, and what I'll do is we'll start it, January 1st or whatever. And I can also maybe add Grandy or something in there. I don't know. I may add a few more and have a new starting date. But anyway, from our first starting date, it's been tough going for ULTI. Even at this point right now, still down 27%. Blocks down, what is that, 8? I can't really read. You guys can probably read it. It looks like 18, 16, something. I don't know. ULTY down a little bit less. I can tell just by the height of the lines. K yield, it looks like that says 6.8 or 8.6 or something. Oh, WPay down about 12%. Come on, WPay. Boy, K yield's really starting to look good. Not like it always hasn't. We'll look at the individual stocks in it, but I mean, it looks good relative to these other ones, yet they're all still down. So anyone that you invested in outside of Chippy or the SPY has been a loser. But let's just say, forget about anyone that you've invested in other than Chippy has underperformed the market. But you can't always outperform. I mean, you do what you can. But anyway, now on a daily return basis, look at this ULTI. Come on, look at that ULTI just up big time. That's got to be wrong, right? Let's go check that out. That's got to be wrong. Oh, I don't even know which microphone I'm using. It's probably the real echoey microphone that comes from the camera. No one's griped about it yet, but on the laptop, remember the laptop itself had a bad camera but a good microphone. And anyway, but we'll troubleshoot the microphone later. But if the microphone sounds echoey, we'll figure it out. I'll mess with that tomorrow. Anyway, all right. But ULTI, look at this. It darn sure was up big today. Man, I'm so addicted to pinching, to zooming in. I never realized how addicted I am. Man, those freaking trackpads, those Apple trackpads are expensive. Everything Apple's expensive. But man, I just want one of those little silver trackpads. But and they're sure proud of those. Oh well, that's the way it goes. All right, so back here. So great day for ULTI. Obviously, I mean up. I can't tell. It's at 3.07. It's a good day, whatever it is. I mean, and we'll take blocks too. Any up a percent, we'll take it. And ULTY, what in the heck are you doing? What are you doing to us, ULTY? You got to be kidding me. All right, well, let's talk about the good first. Let's go look at what ULTY did right today. So I'm going to pull up the ULTY trades, or well, not the trades. We're just going to pull up the positions. If you want to look at the trades, go watch ETF Inspector or read ETF Delta's content on Substack. Those guys have the best content on these funds out there. But just from mine's kind of a broad look at it. What did they do? It looks like it's a broad look. It's wrong all the time. It's wrong right now, or they left off something. It looks like. Oh, well, they're consistent. They missed it on all of them, so that's fine. Okay, that's fine. I could deal with it. All right, so let's look at it. Let's look at, they left the option trades off, but that's fine. We won't worry about the option positions. Let's just look at ULTI. This is the actual, the shares they have and the actual value of it and the weighting of it and the daily change of the stock. So like ASTS in theory was up 5.63%. In theory, if I check this, it should say up 5.63. I'm not 100%, but the way I have it programmed, it is supposed to pull all of these prices up. But yeah, I think that's right. So pretty much everything was up except for this Applied Optoelectronics. Jeez, is that right? APL. Jiminy Criminy, did you guys see this one was down 13.26%? Well, that's why I wish they would have. I wish Claude would have remembered to put the option trades on, because we could have gone and seen what their exposure was. But these guys don't hedge. I bet you they got exposed to that whole thing. Well, whatever. I mean, the market maker knows what they're doing, and the market maker has these guys up 3%. So they must have had some giant winners. They did, and they had, look at this, they had Bloom Energy. They had bigger winners than that. Their winners overwhelmed their losers. Well, they had a great day. So I'm just going to say my take on this is the new ULTY. These fund, I mean, look at the stocks they use. It's on the riskier side. This is like ULTY used to use, in my opinion, more like ULTY. ULTY quit being ULTY, and ULTY switched to something else. This is the new ULTY type thing, in my opinion. Anyway, whatever. They did a great job today. Now let's go look. Let's go look who did the worst job today, and that was ULTY. I wonder if ULTY has that applied optoelectric, the one that was down 13%. No, but applied. Okay, but ULTY has one that was down 11%. What is that? Lulu? Is that Lumentum Holdings? Or yeah, Light, whatever Light. Okay. Anyway, ULTY had a rough day, and you could see some of the stocks in their portfolio didn't do well. Quanta Services, which is PWR, got killed. LITE got murdered. Anyway, rough day for those guys. Oh, but I was going to say, but these guys, they're no longer the new, the old ULTY used to be the highest risk stocks, whatever, the highest IV. And now that's more like what ULTY is doing. These guys are doing more of a, they're doing more of a different deal now. Trying to add in uncorrelated things like bonds and gold miners and stuff. They're trying to, instead of just being all in the highest, highest paying ones possible, they're trying to be in the high paying ones, but also trying to consider an overall portfolio. So far, so good, but the market's also been going up. We'll see. But they have ones like VanEck, and they have ones that the old build would have never had. The old build would have looked more like ULTI, in my opinion. I mean, but the current build of ULTY still has plenty of batshit crazy, risky stuff in it. So it's not like they, but then they have things like Eli Lilly and, Corning and Google and a little bit on the less risky side. And then they have ones like bonds and gold and stuff on the less correlated side. So anyway, and then we have blocks. Now blocks, blocks is just its own creature. Blocks is just a bet on crypto. I'm glad to see MicroStrategy's up 5% today. That's good to see. But anyway, I need to work on this. I need to work on all this stuff. I'm just getting used to all this, but I appreciate you guys helping me break it in. Yeah, ULTY did get killed today. My gosh. It did get killed today. I know something else I was going to check. Let's look at like this. Or I'm still trying to figure out how to look. So there's the index buffer report. Oh, but you guys can't see that. Anyway, it's not that big of a deal. You guys can just see that. Oh, well. All right, what else do you want to talk about? What else do you want to do? I'm really excited about all these new. I'm so far behind, but I'm so excited about all these new funds that are coming out, and it's a great time too. With the market being at all-time highs and stuff, and there's a lot of funds coming out that are offering a lot of downside, protection. Now, what's the one called that just came out yesterday? It's a tail risk fund. We were talking about it yesterday, and it's already off my radar today. It's from it's not the dual direction. I mean, that's cool too. What was that? It's like Oh No, but it's not Oh No. What was the name of it? Marcus, I know you know. I want to talk about that one for a little bit. I want to talk about that one for a little bit. If anyone knows what that one was, I was talking about. You're getting your silver abscesses covered with bullion K-Silv and some miners. Learning a lot about miners, tons of growth in some of them. Yeah, Z Bikerman. Eric the Aviator, you're wondering if Mister's on its way back up. Let's go look at Mister. Boy, wouldn't that be nice? Wouldn't that be nice? I mean, you could call that a head and shoulders bottom. There's the shoulder, there's the head, there's the other shoulder. You just, no, we don't want to do that. Call that a tradable bottom. If it gets, obviously, if it takes out 148, it's probably going lower. But I mean, if you guy wanted to trade that, you could play it against that low. But man, it's like when I look at iBid or something, when I look at blocks or whatever, anything crypto related, it just has so much work to do because it fell so far. Not that it can't do it, but I mean, not that it can't do it, but I mean, it's just fallen from a long high, and that includes dividends right there. It's even going to look lower without dividends. All right, but yeah, I don't know. Oh yes, ATTR. Marcus is the man. Marcus is the man. ATTR. So let's ATTR and Mago. Those are two I'm really excited about. But also these income blast products are going to be cool too. He's going to be on the show. The guy from Quantify, David, is going to be on the show next week. Aaron Tactical Tail Risk. It's done nothing but go up. I'm trying to think. Now, on this one, I wanted to make content, but it's just like, and I don't know if I'm going to, it's just like CAIE. The reason I didn't is I realized I had no idea what an auto-callable was. I mean, I can watch other people's videos and repeat what they're saying, but I didn't have anything to add on my own like I do on option strategies. On this one, they're doing some kind of sophisticated hedge. I liked it. I need to make I'm working on some content on it. I think you guys, yeah, I'm working on some content on it for sure. And then there's another one that just came out this morning that we were looking at this morning. The one that came out this morning was it CPSL or something? No, because that one's been around for a while. From Calamos that does. Man, there's just so many. I'm getting so far behind. But yes, ATTR will definitely have some content coming out. Yeah, it's basically Oh No without a dividend. Also, I think, and yeah, it's Oh No without. That's one way to look at it. Oh No actually has another element in their lineup too, but the other element is probably the same thing. The other element is probably the dividend. It's probably how they generate the dividend. But yeah, Von Alti did get killed today. I hated to see that. I'm trying to see what else I can do here. Let's see. So let me try to figure some more of this stuff out. Let's see. Index buffer. So you guys, oh yeah, we've already been through this. You guys can't see that. No, you can't see that. Gosh darn it. Well, anyway, like I say, I'll figure something out time. But yeah. All right, guys. Thanks so much for being here. I appreciate each and every one of you, all 10 of you guys. And I'll keep working on this stuff, and I'll be back tomorrow. All right. Thank you very much, and I'll talk to you soon. Hang on, Marcus put something here. That's what we were talking about this morning. KIQQ. That's the one I was trying to go somewhere with that, Marcus. What I was trying to say is, the reason I didn't talk about CAIE, because I had no idea. I mean, I didn't have anything to add to the conversation. On this one, they are doing something that they're doing some kind of real sophisticated strategy. Instead of using puts to hedge, they're taking some type of swap that's a bullish swap, but they're shorting. They're taking the other side of an index of a total return swap, and they're shorting the others. So this is one that I might not be making much content on, but I'm fascinated with the concept on it. I'm fascinated with the concept, and I'm not bullish at all for this year. I really don't know why I don't just put the entire model portfolio in triple QH. You know, in the ones that are hedged on the downside. You know, SFAR, CAIE, CAIQ. This one. So anyway, but this is the dynamic hedged one, and I actually looked into this one quite a bit, and that's where I got stuck, is because I was trying to figure out what is the dynamic part. The dynamic part is, they're enhanced collar, exactly. But when it comes down to it, what it is they're, instead of buying puts like a lot of other funds do, their edge is they say they can more efficiently replicate the job of a put by shorting this total return index. Something that's totally above my pay grade. I understand the concept of it, but that's about all. Anyway, it's like anything else with these. There's no free money. We know there's no free money, so we can look at how much there's what the NAV does. There's how much money they pay out, right? And then I guess there's what their parent that they're supposedly tracking does. So we'll just throw it in the max factor. We'll look at what the parents does. We'll look at the NAV that comes out of it, and the dividend that comes out. But we'll look at the NAV, and we'll get a pretty good idea on what it does on their enhanced collar. You know, you can call it whatever you want, but at the end of the day, it's going to put off so much yield, and it's going to do, have X effect on the NAV, and we'll go from there, right? All right, guys, we'll definitely keep an eye on KIQQ. But yeah, that's exactly what I was talking about, Marcus. Thanks for bringing that. Thanks for reminding me of that. Thank you so much. All right, guys, I appreciate it, and I will talk to you later.